Coming up after the break, Google's already taking over search and email. Now it wants to be the go-to service for video calling with a brand new app called Duo. Can it knock out FaceTime and Skype? The roundup is next. When someone takes out a mortgage, there's always a risk they'll default, not pay. Now the government is considering ways to make sure the banks share more of that risk. That story kicks off the roundup. Nicole Verkindt is the founder and president of OMX. She's here to talk about this story and others. So, Nicole, we got this information. Basically, it came through a briefing note that was prepared for the Minister of Finance. And it's basically a measure that the government has been looking at. Obviously, it hasn't quite happened yet, but the spokespeople from the ministry confirmed this is on the table. And it would make banks take more of the risk, because basically right now mortgage insurance is backed by taxpayers, right? What do you think? Is that fair enough? Banks should be on the hook a little more?
I think it's good they're considering it. I think it would be prudent to have the banks share in that risk in some element. I think we saw a very extreme example happen in the United States. But I think overall, especially, I'm a tech entrepreneur and I look at fintech companies, and I think we're going to see more and more options coming on the table for lending for mortgages. And I think overall, if the economy is incentivized to provide mortgages for people that can't make down payments of 20% or more, I think we're going to start to see an increase in risk. So I think when you look at incentive systems, it would be a prudent thing, and it would be a good thing to have the lenders on the hook for at least a portion of it.
It's interesting. I mean, when I was looking at this, one of the things that analysts are saying about it is that it could add to the cost of a mortgage, right? Because if there's going to be, this additional cost to the bank.
It's already adding to the cost. 3.6% more a year that you're paying if you're going under CMHC is a big increase in cost. So, if you're only putting $15,000 down for a $300,000 home, but you're paying a lot more interest, then I think that's really adding to the cost itself. And we have an overheated market right now as well. So it's getting more people into it.
And this is, I think, partly, of course, why the government is looking at all sorts of different measures. And this would be something, could it be a way to bump up interest rates just on mortgages? Obviously, the Bank of Canada doesn't want to overall raise interest rates because they're still trying to stimulate a somewhat fragile economy. But if they could do something like this, which might raise rates, could it cool things down? Because, the overheated is the term that's always used about Canada's housing market, and lots of people think that's a vulnerability for our economy.
Yeah, absolutely. I was looking at the research, and the CMHC was set up initially to help veterans after the Second World War who couldn't come into their first home. But now we're seeing it being used to put much lower deposits down than what you can afford, and having multiple homes. I think we're seeing examples where it is contributing to that overheating.
Although, of course, not surprisingly, the president of the Canadian Bankers Association says this move would make the system more complicated and more uncertain. It's really not needed. So it's not happening yet, but we'll have to watch.
Well, if the banks are against it might be a sign that it could be a good thing.
Well, that's one way of looking at it. So now let's talk about this survey that was done by investment firm Charles Schwab in the U.S., although I think the research they found could probably apply just as well to Canada. It's basically, they asked millennials, 1,000 millennials, to rank their financial concerns. And they had a whole list from, student loans, credit card debt, job security, and the majority of them were concerned about retirement. And yet, very few of them doing much about it.
Which is pretty far away for them, right? So I think it actually is related a little bit to the first story about housing. So I think it's a lot harder for millennials to get into the housing market. I think a lot of people who are retiring now, the dramatic increase in their home prices have been a big contribution to their retirement and their savings. So I think it's cheaper for millennials to buy food and automobiles, and the cost of living has come down, but the housing market seems to have increased dramatically. So there's that point. The second thing is large corporations seem to be less and less inclined to be contributing to corporate pensions.
Well, yes, of course. The pension isn't what it used to be. They're only define what you're going to put in, not what you're going to get out.
Right, and I can sort of relate to why they're concerned about this and why they don't want to get into it. My grandfather has been alive for a lot longer and spent more years outside of work than he was when he was in it. And he's been collecting the pension. And I think they're not getting the high enough returns that they were getting before. So it seems like for millennials, they're going to have to mostly rely on CPP and TFSA, and I understand CPP is going up, which I think, although it could be bad for the employers, good for the millennials. So, but the biggest thing that I see is that millennials are staying in these jobs for much less amount of time.
Right,
so they're not staying for their
turnover.
entire careers, right?
Yes.
So they're moving around a lot. They're earning multiple streams of income. We're seeing all these platforms where millennials are earning income from multiple different sources. They're often contractors, not just full-time employees. So I think we're seeing a shakeup there, which basically requires the millennial to be proactively topping up their CPP and contributing if they're not a full-time employee. So I can understand the concerns. Also, we're living a lot longer. So in order to properly plan for retirement, you have to make the best guess on when you're going to die. And I think we're all living longer. We don't know. Although it's very far away, and I personally don't know a lot of millennials that are talking about their retirement. It does make sense when I start to look into it.
Yeah, oh, for sure. I mean, it's unfortunate, really. Young people, so many different ways that it seems they're not going to be as well off as the boomer generation.
I think the stress is coming from the fact that the responsibility is more on the shoulders of the person, too.
Absolutely, absolutely. Now, another story for you here. The back-to-school sales used to be, clothing, pencil cases, binders. Now, internet is going on sale. Apparently, Bell and Rogers both have some discounted prices for students. Actually, the big three, including TELUS, also, they had 200,000 additional subscribers in the last quarter, which is pretty significant. But in any case, some deals coming up for kids, at least for the first few months before the regular price kicks in.
And internet is like water to them too, right?
Essential.
This is good, and I think the story today was about the fiber optic cables, particularly in Ontario, and this whole debate about if one of the big companies pay for all the infrastructure up front, and the government now, CRTC, is requiring more competition, that's a good thing. But companies like Bell are complaining and saying, well, our competitors are getting this for too low of a price.
Well, sure, and I mean, Bell's putting $20 billion into upgrading its network before 2020. So these are obviously extremely expensive infrastructure.
Yeah, and I might be a little biased, but I think the internet is such a critical thing, that especially for students coming in and learning and the knowledge base, and I think it's going to increase more and more even for entertainment, and television is starting to be streamed. So I think it's important that these companies still remain incentivized to make those huge upfront investments in the infrastructure and the technology up front. And so we need to come up with a framework, and by we, I mean the government needs to come up with a framework that incentivizes companies either through a direct subsidy or a tax incentive to make those large investments up front while still being able to have their competitors buy it at a rate that's still good for them.
Yeah, well, that's about one of the issues. Is Bell has been fighting the CRTC to say, no, we don't want to sell wholesale price to competitors so that they can use part of our network. Although on the one hand, well, hey, it's a source of revenue, isn't it? They could share a little bit in these costs of these huge builds, but no, they
and personally, I had a hard time with this one. I'm really torn as to how much the government should get involved. I mean, I would prefer it to be less, but in this case, we want the competition.
So, Nicole, what do you think about Duo?
I love it.
Google is launching this. It's a new, video chatting thing, just like Skype and FaceTime and so forth. But this one, their little feature is knock knock, which they're saying as soon as the call comes in, you're seeing the person. So basically, you have a choice of whether you want to answer or not.
Yeah, I like it.
Is that a selling feature for you?
Well, I think the real selling feature here is the fact that they built this app specifically only for mobile. So they didn't take any compromises. Skype, is for desktops and mobile and multiple browsers. This is only for mobile, only for Android, only for iOS. So they've stayed very, very focused. They've said a no to a lot of things, and it's a lot faster, it's better, they don't have as many features, but they're focusing on the one thing, which is the video chat. So I think the real story here is Google going out on a limb and having tremendous amounts of focus to say we want to be the best sort of FaceTime equivalent of a messaging app, and really only focus on the mobile. So I think that's the real story here, and the knock knock I thought it was cute. I love when technology companies emulate the physical world, so like someone's knocking on your door. I was thinking, I grew up in the country, so I don't even remember having someone just randomly come over because my driveway was 1 kilometer long. But I like it. I think that it's neat when they try to emulate what you would do before the tech existed.
Right. All right. Well, thank you so much, Nicole.
Thanks, Dan.
Good to see you.